I want to be very direct about two things this course is, and two things it is not. Most coaching business books pick a side. They are either thorough and timid, hedged on every page with check with your CPA first, which leaves you holding a long disclaimer and no usable content, or they are bold and prescriptive. Form this entity, save this percentage, do these 5 things, which is wrong for half the readers and outright dangerous for some of them. The shape of this course is the refusal to pick a side. Promise and boundary held together starting in this first video. Both pieces are at work in every module, and you have to hold them at the same time. The book promise is one half, depth and completeness, written so any decision a coach faces in founding or in operating year one has a lesson with the categories named and the trade-offs laid out. The boundary is the other half. The 5 regulated lanes where a licensed professional is the only one who should be giving you advice specific to your facts. Either piece alone breaks. A book without a boundary turns into malpractice. A boundary without a book turns into a long brochure that doesn't teach anything. The course only earns the word book because it also names where its competence stops. Let me put numbers on what the promise actually covers. 21 modules. The founding sequence runs from confirming you're even in business, through forming the entity, through getting payment infrastructure live, through closing the first tax filing. The operating year one cycle runs from monthly bookkeeping discipline through annual close. 6 implementation maps cover the starting situations I see most often. Forming cold is the default, and there are 5 variants for people already operating informally: side practicing on a W-2, exiting a corporate role, founding a U.S. entity from abroad, or living abroad as a U.S. citizen. Comprehensive here doesn't mean long. It means every decision a founder has to make has a lesson with the categories and the trade-offs. Now the other half. 5 lanes are regulated, and in those lanes, a licensed pro is the only person who can give you advice that fits your specific facts. Legal, your attorney. Tax, your CPA. Investment allocation, your fiduciary. Day-to-day books, your bookkeeper. Insurance product placement, your broker. The course teaches you to be a competent buyer of each of those 5 services. Competent buyer means you walk in knowing the categories, the questions, and what a good answer looks like. It does not mean you become the pro. It means you stop being the most expensive client that pro has to bring up to speed before the real work starts. 7 commitments hold the boundary in place across every module. First, categories and decisions, never the decision. Second, find your pros in every regulated layer. Third, generic, never jurisdictionally specific, because Texas franchise tax is not Delaware franchise tax, and I will not pretend otherwise. Fourth, methodology, not prescription. Fifth, no published numbers of my own because my numbers are not yours. Sixth, pro content review on every regulated lane module. Seventh, the founder's boundary placed early at module 3, before any module that would tempt you to skip past it. When a later lesson refuses to name a specific number or push you toward a specific entity type, that's a commitment doing its work. Let me make this concrete with someone you might recognize. Maria is a composite, pieces of half a dozen coaches I've talked to in the last year. She's 6 months into coaching. Stripe payments deposit straight into her personal checking account. $18,000 of revenue so far. No entity formed. No separate tax tracking. She emails me one sentence. What do I do first? If you've already done the founding work, that email is a comfortable problem. If you haven't, it's the hardest email Maria will send all year, because she doesn't know what she doesn't know, and she's afraid the answer will involve money she doesn't have yet. Here is exactly what I will not write back to Maria. I will not say form an LLC. I don't know her state. I don't know whether her state has a franchise tax that hits sole member LLCs the day they form. California's is $800 annually on day one. Taxes at her income is zero. The advice does not generalize. I will not say save 30% for taxes. That number assumes things about her filing status, her spouse's W-2 withholding, and her deduction posture I cannot know from a paragraph. And I will not name a specific retirement vehicle. I am not her fiduciary, and that's a different person's seat to sit in. Here is what I will say. There is a default sequence for founding work: entity decision, formation, EIN, business banking, business books, tax discipline, insurance, payment processor, retirement vehicle, year-end close. That sequence is in Module 1's 6 maps. Maria can find herself in one of them and walk it. The pieces that need a CPA or an attorney or a fiduciary or a broker are flagged in the maps with the Module 3 unit that teaches how to evaluate and hire that specific pro. So my reply to Maria comes out 3 lines long. Open Module 1. Pick your map. Module 3 will teach you to hire the 4 pros you'll need. Before you move to the next video, do one piece of work. Open a note. Write down 3 operating decisions you have been avoiding for more than a month, specifically the ones you've been avoiding because you didn't know who to ask. Do not try to answer them yet. The answers come later in the course, and the satisfying part is that for each one of those 3, you will know by the end of Module 3 which pro owns the decision, how to evaluate them, and how to brief them, so the answer comes back useful. Those 3 decisions are the proof the course did what it promised.